As of today, as of 1 minute after midnight, Americans can now buy gold for the first time since 1933, when Franklin Roosevelt made the ownership of the private ownership of gold illegal by executive order. The new law has been expected to set off an actual gold rush. You will be able to purchase gold rather easily in some banks and brokerage houses and even in some department stores. But it isn't cheap. The current price is around $195 an ounce. It had been expected to go even higher in recent weeks. We hear that it's suddenly gone down, and we'll find out what that means. Well, what can you do with the gold after you buy it? Really just about anything you want. You can store it in a bank, you can hide it under your bed, you can keep it forever, you can sell it. With us this morning are three men who are going to discuss with us what it means to buy gold and whether it's a good investment or not. They are Dr. Henry Jarecki, who is chairman of Walcott Metals Corporation. They are the nation's biggest gold and silver bullion dealers. Russell Rouleau is editor of World Coin News, and Dr. Henry Kaufman is an economist for Solomon Brothers, the investment house in New York. I am holding in my hand a very heavy bar, 100 ounces. It's worth $19,000. It now belongs to me. Anything I hold in my hand on this program becomes mine. This is a very small amount. This is 10 ounces, right? What would this be worth?
That's worth about $1,950.
And you can also buy gold in the form of coins and gold in just in terms of paper that will give you an assurance.
Yes, actually, you've always been able to buy gold in the form of old coins, pre-1934 coins we have for a long time. And it's only now that people can buy bars of gold.
Okay, why, first of all, why now? Why today, the last day of 1974? And why, after all these years, can Americans now buy gold?
This was an act of Congress that was taken earlier in 1974, and in my opinion, it was done in a very helter-skelter fashion. There was a request by the administration earlier this year for an appropriation for the World Bank. That was opposed by Congress. Some members of Congress, in turn, wanted gold to be legal for ownership. And as a result, there was a sort of an arrangement made between the administration on the one hand and members of Congress on the other. And we've had a package legislation appropriating the money for the World Bank and allowing Americans to buy gold. It's a peculiar way to authorize this important legislation without a very detailed consideration.
Why today? Why the last day of 1974?
That was moved up. It had been actually the early part of 1975, the first few days.
Is it just coincidental?
It's just coincidental.
It doesn't mean that
it doesn't mean,
okay.
No, it's nothing significant.
But has this law been changed by Congress because people are terribly worried about the economy and they feel, boy, if you own gold, you really have something, whereas if you own stocks or you have your money in your bank or you're buying, certificates of deposit, that's all very shaky, but gee, if you own gold, you have something.
I think it's characteristic, really, that in a period of continually depreciating money, there was enough public interest in it to have the public prevail on the Congress to make this decision, to permit the American people to exercise this freedom and to have the option of investing in whatever they want. It may very well be, as you suggest, that it has a lot to do with the distress condition of many other investment media, such as the shares market and the bond market. And so I think your connection might very well be one that made sense to me.
The U.S. Bankers Association yesterday warned that the price of gold, which was already at a high, had to increase an additional 50% if gold purchasers were to break even in their investment. The Bankers Association was not very happy about people buying gold. Is it a good investment?
I wonder whether the question is, why are they unhappy about the possibility that people will take money out of their accounts, or whether the question is whether this is an accurate assessment of what it takes. It is not an accurate assessment of what it takes. The differential between the bid and the asked price in gold is a very modest one, a differential of 1 or 2% at most, and except that there are a number of states which require sales taxes and act with the object as though it's any other non-investment.
Look, let's say I have $1,000, right? I have many different things I can do with this $1,000. I decide to buy gold. Does that mean when I want to sell it, I get back $1,000? Do I get back more? How good an investment is it?
It depends largely what your investment objectives are. It also depends a little bit on what you know about gold. For example, These items, a $20 gold piece, a $10 gold piece, and a $5 gold piece, American, are all well-circulated items. Yet despite the fact that they're circulated, that is, they do not have their original mint bloom any longer, they're worth far more as collector's items and as gold items than ever before.
Yeah, but I'm not talking about a collector's item. I'm talking about now the person who says, hey, I'm going to make some money, or I'm going to have a good investment. Is gold per se a good investment?
Yes, in my opinion it is. A Kruger Rand, for example, a coin of South Africa, a 1 troy ounce coin, has the advantage of being sold at a relatively modest premium over bullion value, about 14% at present.
And even buying something like a gold bar, which doesn't have a collector's item value?
It is somewhat less liquid than coins, as far as turning it back into cash.
Or we've been hearing about in the last few days, and most of what we've been hearing about, is that gold is not a good investment. We had a man on yesterday who had written a book on banking and had said to beware. Now the banks are saying to beware, even department stores. At Tiffany, it said in an ad, we're not selling gold, but beware, even a bank can't prevent you from losing your shirt. People are warning us against buying gold. Why?
I think there are several problems in the purchase of gold. One is that you must authenticate that you are buying gold. Number two, you must have a resale value. Number three, you have to have a place to store it.
Okay, authenticating, how do you do that?
You should buy it presumably from a bank that will authenticate it for you, or from a dealer that's highly reliable in the business. The secondary market, of course, depends on the size of the participants in this market. And, of course, the storing function is very critical. You have to put it in a safe deposit box or bury it in your backyard or have somebody store it for you. And then, of course, finally, gold does not give you a rate of return. The rate of return is in the difference between the purchase price and the selling price.
Well, right now, gold prices have plunged. What does that mean?
Gold prices apparently have gone down somewhat between yesterday and today. The price is off. That nevertheless doesn't signify a trend, whether it's permanently down or whether this is just a one-day transaction.
Well, suppose you buy it and you hold it, let's say, for a year. Will you? What percentage of gain will you get, or is there no guarantee at all that you will, or even break even?
I don't think there's anyone that can give you a forecast on what the rate of return on gold is. In contrast, if you do buy a certificate of deposit for 90 days or for 1 year, there is a stated rate of return on that obligation, the interest income plus the return of principal.
What if you keep the gold for 5 years? What if you buy it the way you'd buy a blue chip stock, 10 years?
The only forecast that someone can make to you on that kind of a proposition is to look backwards rather than to look forwards.
What would I know then?
Because if you look backwards, you would have had to conclude 10 years ago the price of gold was $35 an ounce, and today it's $190 an ounce. But as many of us know, the past is not necessarily the path to the future.
If you were advising a private individual, not a millionaire, but someone with a little money, would you advise them to buy gold now?
I would not, but I am not in the gold business. I am an investment banker in the securities business, and I believe it is against the best interest of America and our economy for Americans to have been allowed to buy gold at this point in time.
I think the fact that Americans can exercise a freedom now cannot be against the American interest. But I will say this, that when my friends ask me whether to buy gold or not, my answer to them is that they should take 20 to 30% of their assets and put them into gold, and to hope that the value of gold goes down. Because the society in which we live is a society we will like a lot better when there are low gold prices, because that's a society where people have trust in each other and where there's a great deal more comfort.
They won't be getting a good investment on their money, though, but it'll be a good better
not on the gold part, but on the rest of their lives and the rest of their investments they will. High gold prices signify difficulties in the world, and gold is bought by those who are trying to avoid the possible difficulties that may emerge in the monetary system and in the economy in the future.
How would buying gold today hurt the economy?
I believe it hurts the economy in two significant ways. There are only two sellers of gold in the world today. The U.S. Treasury. And when the U.S. Treasury sells gold to Americans, it decreases the budget deficit at a time of an economic contraction. Wrong policy. Number two, foreigners can sell gold to Americans. They sell gold, they obtain dollars which can become an earning asset. On the other hand, Americans obtain gold which finances no schools, no homes, no roads, no business activity whatsoever. and it hurts our balance of payments. It is an inappropriate move for the government to have taken at this point in time of crisis.
If I may expand on his thought just a moment, Senator Proxmire of Wisconsin on last Friday introduced or said he would introduce legislation to sell 25 million ounces of the national stockpile, presumably at the market price. On the other hand, if this 25 million ounces were coined into United States gold coins to commemorate our bicentennial, they could return far more than the $4.8 billion that he had in mind, because they wouldn't be sold nearly $1 billion price, but at the nominal value.
Let me get back again before we study the whole economy of the country and the world to the individual investor. Right now, buying gold is said to be like buying soybeans, like buying any commodity. Very dangerous, highly speculative. Is that so? Yes. Okay.
No more nor less than any other investment medium.
No more, no less
No
than
more,
stocks,
no less.
diamonds.
All investment media have the same risks. Diamonds and illiquid investment media have the problem for the investor that there's a large difference between the bid price and the ask price in the market, that there's a high transaction cost. This is not true for gold, which is a highly liquid investment medium, just as shares are and just as bonds are.
So two of you think it's very speculative and you shouldn't do it, and you think no more, no less than anything else. Okay, suppose you want to buy gold. What should you know? What should you do?
I think that you should buy gold through a prime investment house, a securities brokerage house with whom you are familiar, or with your own bank. And you should make sure that the gold that you buy is stored in a safe place and that it is made by a prime refiner or has on it the mark of a bullion dealer, such as our own firm, Mercado, which has been in the bullion business for almost 300 years.
Will your bank guarantee that it's real gold?
The bank which sells the gold, or the bullion dealer who sells the gold, will guarantee the authenticity and the weight and the fineness of the gold bar that they sell.
What do you do if you want to sell this gold?
If you want to sell the gold, you can bring it to any dealer in gold, just as you can, or to any bank that purchases gold. There will be an active and liquid market in the United States in gold.
But right now there is no way of knowing how good an investment is going to be in 6 months, 1 year, or 5 years.
No, that is exactly so, because one of the problems now is who will sell gold to Americans. And the gold which is in the world today, a very high part of it, a high percentage of it, is owned by foreign official institutions, meaning governments and foreign central banks, as well as by the U.S. Treasury. They are the big holders. Now, if they supply, they can certainly influence the price. On the other hand, some foreign countries may decide to use their gold as collateral for loans, and the proceeds of those loans will finance oil imports. That is yet unknown as to which way the transactions will go. Will foreigners sell the gold to buy oil, or will foreigners pledge that gold in order to get loans to buy the oil? There's a difference.
The ramifications are obviously very involved. We only have 1 more minute. Are you buying gold?
No.
Are you buying gold? Will you do as your business? Would you do it as a private investor?
do it,
Tell your
it
sister-in-law to do it?
Yes.
You
of
would?
course.
Okay, as a good investment right now.
As the best investment in 2,600 years. It's been money ever since man has been civilized.
Even though you're aware that it's very speculative.
Yes.
I would follow the advice I give my friends. Buy 20 to 30% of my, put 20 to 30% of what money I have for investment into gold, but I would hope that the price of gold will go down.
You'd hope that it would be one investment where you would not make a
Yes.
profit. Thank you, gentlemen. It's been illuminating. This is yours,
Yes, thank you.
unfortunately.
Not mine.
Honesty
privately.
survives.
We sold one last night at 12:01 to Senator Buckley, who made a statement about in our
What do you
office.
pay?
He paid $192.
What is it as of right now?
It is approximately the same price because at late last night we knew what the prices
So
were.
Senator Buckley is still solvent, which
Yes.
is more than many of us can say. We'll be back after this word.